Welcome to The Breadwinners, the podcast about the never-ending hustle and its impact on all aspects of our lives. We're interested in what it takes to keep everything going. This podcast is about women, working, money, and family. We consider the research, talk to experts, and share our takes on what we're learning every day about breadwinning. I'm Jennifer Owens. I write about working, wellness, and women, and founded the Working Mother Research Institute. And most days I'm joined by my co-host, Raquel Ellison. Today, we're back for a special series, talking to guests about the challenges facing the sandwich generation, meaning those of us juggling kids, parents, and careers all at the same time. I know firsthand how complex family life can be and how it can change in an instant. I also know how hard it can be to prepare for the future, especially one that impacts our kids and our parents, let alone ourselves. Our guest today knows that too. Jake Tamarkin, thank you so much for sharing your sandwich expertise with us today.
Thanks, Jennifer, for having me.
So you are co-founder of Everyday Life Insurance, which is oddly a topic my spouse and I are talking about a lot these days, and it may be every day. So I am very, very glad to have you in the club today. So can we set the scene and kind of start out talking about what Everyday Life Insurance is, what the mission is, what you're doing?
Yeah, absolutely. And first, it really actually ties to the fact that you and your husband are talking about it a lot these days. It doesn't necessarily have to be that way.
Mm.
You know, life insurance has been around for a long time, and yet still it's a very complicated topic for a lot of folks, and it's difficult to find the help you need to make good decisions. And so our mission is very simply to make it easy for anyone to get the life insurance they need. And the key word there is need, because there's a lot of agents and insurance companies out there that are happy to sell you whatever is on their agenda. But we really are excited to help people just get what they actually need to protect their family.
So your background is in financial services, and I know I've read you say that the life insurance industry is broken. So I'm particularly interested to hear kind of what you see with your experience and what do you mean by that? And especially for those of us in the sandwich generation between, my kids growing into college tuition, which is now a reality for me, and then my parents growing into their next chapter. How does the industry view me?
Yeah, well, it's a great question. And this gets to what I mean when I say the industry is broken. You know, what I mean by that is that, there's over 700 insurance companies out there today. There's over 1 million.
What?
Yeah, yeah. Just life insurance companies. There's over 1 million life insurance agents out there. And yet, use of life insurance by regular everyday people, and by that, to define it specifically, I mean the 2/3 of U.S. households that are making less than 100 grand. Use of life insurance among those folks has dropped by 25% over the last 10 years. And that's shocking and horrifying to me because these are the people who need it the most. But yet the industry has turned into one where the focus is on, helping more affluent families kind of get even more affluent. And that's all well and good. But, we're interested in helping the people who really need it the most, including folks like you're describing, people with kids going into college and their own lives to think about, and parents that are aging. It's a very common situation. And unfortunately, the industry is just not focused on helping folks in that kind of situation get the coverage they need. And so, what we did was build a technology, an online platform that makes it super easy for anyone who needs to quickly evaluate their situation and find their ideal life insurance plan.
My life insurance situation is, and I'm sure everyone everyone wants to reveal their life insurance moment to you when you meet them. So we got life insurance when we were pregnant with baby number one, who is the one who's off to college now. And that was a big point of discussion. Like we knew, okay, we're going to do that. We were offered 20-year term. And the first big discussion for us was how much money, how much coverage do we need? And that was a real point of difference between what my husband thought we needed, which was less, and I thought we needed more. But we were just guessing. no disrespect to the agent who helped us 20 years ago, but
Uh-huh.
I felt like we had to, you have to figure it out for yourself. But yet I had very little math knowledge to
Yeah.
know how to decide, I guess. And so, am I
Yeah.
alone on that regard?
No, not at all. And that's why we really focus on providing objective, trustworthy advice because it's not straightforward. And frankly, there are the rules of thumb that are out there are I think are not that helpful. And it's really important to evaluate your individual situation. And the way that we recommend people approach it is for most folks, the reason why they're getting it is to protect their dependents, right? In case something
Right.
were to happen. And so if you think about it, what you're really doing is one way to look at that is you're replacing your income, or for a
Yeah.
stay-at-home parent, you're replacing the support that you're providing. So we recommend thinking of it as income replacement. And when you think about it that way, it actually offers an opportunity to get smarter coverage. And what I mean by that
Yeah.
is, very simply, if you think about it, your needs are going to change over time. As your kids grow up, hopefully we all like to think our kids will eventually become self-sufficient. And
Oh, hilarious. But yes.
it's really more about making sure that the coverage is in place so that if something were to happen in the time between now and when they are kind of launched and on their own, that their needs are being met and that their standard of living and all the things you were hoping and wishing for them are not curtailed.
Yeah.
And so the way that we look at doing that math, it can get complicated. That's why we built a tool for people to make it easy for people to evaluate. But if the basic approach is to think about how many years are perhaps remaining in your career, for example, and how much money you're making, and you can kind of multiply those two. So, for example, if someone maybe is about 20 years away from retirement and they're making $50,000 a year, then you might think, okay, I need $1 million worth of coverage, right? 50,000 times 20 years. But
Hmm.
where there's an opportunity, though, to kind of fine tune it a little bit. If you think about that, if you were to do that math 10 years from now, you're going to get to a different answer, right? It's 50,000 times 10
Right.
years.
Right.
And so there's an opportunity to get coverage that adjusts that way so that your needs are still being met, but in a more cost effective way.
Oh, that's interesting. Yeah, because we were making so we signed a policy. It's for 20 years. And so you better try to figure out what you might need at year 1 to year 19. Like it's
Right.
gonna be the same. Oh, adjusting. I like
Yeah.
that.
Yeah. And by the way, the first, I should have said that I think you guys absolutely did the right thing. I mean, I know it can feel weird as your policy is expiring and you're thinking, what do I do now? Oh, I wish I had bought something different back then so I didn't have to think about this now. But the reality is, you guys, we strongly advocate for term life insurance as opposed to permanent life insurance. The reason is just in the math. The permanent life insurance costs generally about 10 times as much. And so
Wow.
yeah. So even though you might need to go back to the market and buy another policy now, and you may not, it's worth looking at your situation before you make that decision. Even still, even though the rates are going to be higher for you now, in the long run, if you were to just, do the math, you would see
Yeah.
that you've saved a lot of money by taking the approach you're taking.
Well, and so that's where this becomes the Help Jennifer podcast. That's
Yeah.
exactly where we are. That we are coming to, we have a couple years to go because our baby is 18. And so we bought 20-year, and that seemed, very long, long into the future when we bought it. But we still have, in terms of thinking of it, income replacement. And I'll tell you, life insurance is, knowing that I had that, even in our most difficult financial moments, I have always felt insured and protected, that if something happened to one of us, I knew the future was okay. We could pay off the mortgage, we could get the kids through college on what we had agreed to for 20 years. But we still have another, we like to say 7 years to go on
Mhm.
college, not to mention 10 plus years to go on the mortgage of a
Mhm.
30-year mortgage of so and so now I think what was I thinking that a 20-year like we weren't going to be done in 20 years, but I so now that's the decision, and that's the information we every time we dip our toe in to get that kind of information of what do you do next when you are in the middle but you still have a ways to go.
Mhm.
I'm not really near retirement. I don't
Mhm.
know. I like so what is some of the questions you should be thinking about at this weird stage of the end of your first term life insurance?
Yeah. Well, one thing to think about is what kind of assets do you have right now that could be used to meet this need? Like, for example, if you've been able to save some money for your retirement, that money, obviously, if you were to unfortunately pass prematurely, you obviously wouldn't have a retirement to fund anymore.
Oh, yeah.
That money
Right.
can be used for that need. So I think it's really worthwhile to, we were talking about doing some quick and simple math before, but you then look at, what kind of assets do you have that can offset that?
That you just blew my mind. I never thought of that. Exactly. Oh my goodness.
Yeah.
Yes, right.
And this is kind of part of why I complain that the industry is broken because, it's not necessarily in an agent's interest to point that out to you,
Right.
but it really has a dramatic effect on what you might actually need to buy, or maybe you actually don't even need to buy anything more. And, you
Right.
know,
That we've created our own life insurance in a sense, but
yeah,
by my partner's retirement and my retirement. Oh, that's interesting.
right.
Okay.
Right. Yeah, exactly. And I think it's really important. It takes a little bit of discipline, but I think it's really important to think about this income replacement because you can start thinking like, oh, my mortgage has another 30 years on it. But, maybe you were planning on retiring, and I'm just making this up for
Yeah.
conversation, but let's say you're going to be retiring in, 15 years or something. You don't need to, I would like to think when you got that 30-year mortgage, you had some thought about how you were going to pay it down after your retirement.
No.
So don't worry about over protecting. You're protecting your income, and just think
Right.
about it that way. The other reason to do that is because, and this gets back to like a common selling tactic among agents, is that, otherwise what starts happening is for someone with maybe kids, as you start thinking about college expenses, but it's a ways off and you're not sure like how to estimate what that's going to be. The temptation is to think, well, my kid's going to Harvard. That's going to be $75,000 a year as a sticker
A
price.
minute. Yeah.
Right, right, right. So I need, that's going to be another $300,000 worth of coverage or something, and that's crazy because the reality is no one, often very few people actually pay the sticker price for college,
Right.
and what you actually pay is a function largely of your income and your assets. So let's go back to income and worry about it from that perspective, and not from all of the imaginary expenses we could possibly ever drum up.
Right. And so what are some of the the insurance? So if you decide like, oh, I've come to the end of my 20, seriously,
Yeah,
asking for a friend who is me, if you are coming to the end of term, are there other products? I seriously, to your point, we dip our toe in. We feel like the faucet of things come at us of
yeah.
and that you have to figure it out. And yeah, so are there options to consider other than something that's a fixed term or that are good to keep an eye out for?
Yeah. Okay. So let's, if
Or fixed term is the best way to go, and we should,
well,
but it should only be 10 years or.
yeah. I mean, it comes back to the need. You just
Okay.
we need to get out of the mindset of like I always need to have insurance, and I should always just buy as much as I can afford.
Okay. So between you and me, this is something my mother has drilled into my head. Now it was regarding health insurance, but I
Uh,
just take that word to every, like my mother drill, never, especially dental insurance. We have a lot of weird teeth issues in my
uh,
family. So yes, I am completely predisposed that I cannot live without this insurance business. So
Yes.
yes. So
Yeah.
now, just so you know who you're talking to
Yeah.
here.
Well, and we all, are drawn to that in some way. And the thing is, though, that's really important to remember is that you're buying protection, right? And this is a hedge, and in the worst case scenario. And so this is a little bit different than health insurance or dental insurance, where you're going to be using it. You know,
Yeah. Right.
this is a little bit different. This is a hedge against the worst case scenario. And the reason why it's really important not to buy more than you need is because most of us have a finite amount of money. And every dollar that we spend to protecting our standard of living through life insurance is a dollar that's not going to that standard of living. Do you know what I mean?
Yes. Yep.
You know, it's really important to strike the right balance, and that's why we really emphasize what is your need. So the term, to get back to the scenario of your friend,
Her
you know
name is Ennifer. Yes.
right, right. So the term is expiring, it's coming up, and you're thinking, gosh, what should I
Yeah.
do now? I think the first thing is to evaluate, like, why do I think I need more protection? And maybe it's because, oh, well, my kids are, perhaps your friend has 7 more years of college to think about. Or, I've got parents who are starting to rely on me more, and I need to think about them. Okay, so now, or a spouse, right,
Hmm.
that relies on my contributions to the household, as most do.
Yep.
So then the question gets back to, okay, I've established there's a need. These are loved ones I want to protect. So now the question just becomes, well, what do I realistically think are how many working years do I have left?
Hmm.
And you should be consistent across your plans. If you've been doing some retirement planning and saving, then whatever assumptions you put into that, you should be carried over. So, maybe I projected
Interesting.
that I
Yeah.
was, yeah. So, if you thought I was going to work till 65, I was going to work till 70. I mean, it's okay to be conservative, but I think it's good to have some basic assumptions that drive your plans. And it's great to be consistent across the plans. And so we decide, okay, well, it gets kind of straightforward at that point.
Right.
Okay, let's say I think I'm going to work till I'm 70 and I'm 50 now. Well, look, that's 20 years, right?
Right. So maybe there is a reason to think about it, like if there's a scenario where, well, we need to, and I that income is going to be important, then I am still thinking in a mindset of income replacement, or
Yeah,
and considering all the, and looking, and what's the scenario, the worst case scenario I'm thinking of, which is my partner passing, like that's the
right.
worst case. And so what would he bring, or myself, of course, too, but what do we bring with the retirement? Oh, see, now all of a sudden this is so much clearer to me. Thank you. Yes, that makes a lot of sense. And
Yeah,
or it's the insurance that we need in the larger sense of the word is just knowing, like, that my daughter's financial aid is in place and set, and like we know we're able to pay that. But yes, I get the income replacement mindset kind of clarifies what we're trying to do here, as opposed to like, trying to do like a financial bubble wrap around
right.
me to, like, so
Yeah,
nothing will hurt me. Yeah.
right. Because I mean, none of those, whether it's, co-signing a student loan or mortgage or none of those other financial commitments that you have, they were all provided to you on the basis of your ability to earn money, right?
Yes.
And so that's what you are protecting, really, is just the value of your career.
Right. And my career is very valuable. I went into publishing. No, that's a joke for all the publishing listeners out there right now.
But
Well, yeah, it goes, so to that end, I'd love to hear about this adjusting of policies that adjust as your needs change. Like, how in the world does that work?
yeah,
How does it work?
yeah. I mean, this is kind of the secret that the industry kind of doesn't want you to know, in a way. I mean, I don't mean to be disparaging the whole industry. We've got, as life insurers, I believe, a very noble purpose It's just we're not doing a good job of actually helping people who need it. And one way that plays out is these techniques that a high priced financial planner might bring to the table, but the rest of us who don't have access to a high priced financial
Yeah.
planner could benefit from. An example of that is a policy that adjusts. So
Mm.
this is something anyone can do. You don't need, it's not some special secret. Before Everyday Life, when I went to buy some life insurance for myself, I did exactly what I'm about to describe. We just at Everyday Life, we just made it easier for people to do this. But
Yeah.
the idea is, if we go back to that scenario we talked through a few minutes ago, someone's making $50,000 a year, they've got 20 years they want to cover. So that means today they need $1 million worth of coverage. But that also means that in 10 years, they only need $500,000 worth of coverage.
Right.
So, a real simple way to do this would be to buy two policies. One is a 20-year for 500,000, and the other is a 10-year for 500,000. So that means for the next 10 years, you've got $1 million worth of coverage. And then for the 10 years after that,
Oh, yeah, yeah. Right. Then it falls away and you've halved that. Oh, yeah, I get it. Yeah.
and the thing is that not only obviously your costs step down significantly, after 10 years, but it actually saves you money today too. So, I mean, on this typical approach, we'll save, our customers maybe, let's say, a couple $100 in the first year, and overall would cut the cost in half, which for our customers could be $5,000 to $10,000, which is real money.
Yeah. Real money. Yeah, for sure. If you think more broadly about your finances, if you were able to invest that money and have compound, returns,
Yeah.
it's the seed for, you could do a lot with that money beyond even just paying the bills that are always there, ever present. So yeah, no, yes, that's a lot of money.
Yeah, and the other thing I'd mention is that it's getting to that point about what else you could be doing with the money. I think if folks listening to this take away just one piece of advice, it is to really think of the life insurance as protection only, to not commingle your investments and your protection products. I think that's very, very important, because a lot of life insurance is unfortunately marketed as a way to build.
I never understood it. That is my big secret I'm revealing. I've never understood those. We didn't go down that road because I don't get what it. I don't get it. That's why we did term in that it like I
Yeah,
understood what the concept was, and this is what we're doing. But yes, the
right.
investment version, like what?
Yeah, and by the way, you're in good company. I had lunch recently with the chief operating officer of a big insurance company who told me the exact same thing that you just did.
Really?
Yes, and these are very complicated products, and I think it goes back to a very basic rule that our parents taught us, which is if you don't understand something, walk away. If it doesn't,
I could not agree more. I covered the SEC for 10 years and was a
yeah,
financial reporter, and that was one of the lessons I learned was the best performing companies are the ones where I could read their financial reports and say, "Get it, got it." You're taking this debt and you're investing. Like I get it. So and yet I do feel I would always appreciate it for major companies, but when it came to my own personal, I do feel sort of like I should understand it. There must be something I'm not getting, and it's on me. And yeah,
yeah, I know
I don't
you're
think that's
made
the
to
case.
feel dumb or inadequate, and
Yeah,
that's what really upsets me about the industry, and why I dove in to start Everyday Life was because I could just see that there's so much. I don't like the way it's marketed. Life insurance is a really important product, but it's just missing the mark. And I saw an opportunity to help people, and that's what really gets us excited at Everyday Life.
well, we will for sure link to Everyday Life in our show notes. So if you are looking for more information on Everyday Life insurance, you can find it there and make it easy to check it out. So thank you so much for joining us on The Breadwinners. I encourage you to email us anytime at thebreadwinnerspod@gmail.com or visit us at thebreadwinnerspodcast.com. Please remember to subscribe and to rate and review us. It really helps us grow. And until next week, keep hustling.
This podcast is part of the Sound Advice FM network. Sound Advice FM, women's voices amplified.